Welcome, everybody. It is a very special day. Our friend Jerome Powell went to Jackson Hole and started dropping money out of the helicopter for everybody. So, of course, we have to bring Scott Redler in to help us understand what the heck is going on here. So, Scott, how are you doing today?
I'm doing all right. I'm doing all right. Just trying to figure it out like everyone else. He basically didn't tell us anything that we didn't know. At this point, it was kind of cute. The spies went up to yesterday's highs. So it squeezed everybody out that was short from yesterday, thinking maybe he wouldn't be dovish enough, and then pulled in pretty hard, not too hard. And now it's kind of making both sides a little uneasy. I think we've been up or down $3 in this range, which has been pretty violent, where I know it's hard to be so long, after a move that we've seen some from since August 5th. If you're active, and if you've been short, too early, it hasn't been easy. So either which way, as easy as it looks, if you're an active trader who trades for a living, uh, it definitely is not. The easiest thing that I did was buy the blood in the street account on August 5th and sell it 6% higher, because I don't look at it every day and it's in a fund and it's a different type of account versus being worried about, getting a paycheck for the month or the quarter, trying to figure out every single move every which way. But there are a lot of things to do, and there are ways to do things responsibly. And it's just been one of those times where this move was a little, I wouldn't say historic, but hasn't happened with this speed and velocity that I have seen in quite some time, where the computers are really programmed for max pain, and you could kind of see that.
Okay, Scott. All right. So we're seeing this sort of big move in like small caps, regional banks. Biotech is bouncing. Do you think this has legs?
Well, the computers are programmed that when the Fed gets really dovish, that's the playbook. Sell tech a little bit, which you're seeing some money come out of tech. It actually was the first group to come in, and you're seeing some action in the small caps and the regionals and the bios. If you look at the chart, let's run through a few charts real quick. Here's let's do I have to do the present
Yeah.
for
Mhm.
everybody. Share screen, share screen, entire screen. Here's here's the spies. You see the spies, and you could see this V that was pretty relentless. Um, a lot of guys, including me, got very long down here. This was the blood in the street buy on August 5th. And even on this day, I kind of felt like it wasn't the bottom, it wasn't the end of that sequence. So on this day, you were able to put some longs back and cover some shorts if you thought that this outside day into the 8 day was going to reversal slower. And then this day confirmed a move higher, then even got a retest right there. So it was pretty methodical up until everyone thinking that that the market is going to fail at 540, and a push through. So to me, that's when I started getting a little careful, a little bit more tight, and I actually started shorting some premium. So I've been in this trying to short some premium higher at every high and trade around it. Didn't give you a way to trade around it, and thank goodness yesterday I was able to cover most of my shorts into this down move, where I still lost money. I made really good money up to here, and then kind of like didn't do great up here. I didn't think we were going to get up there. I was wrong, and I kind of cost average gamed it up. So anyway, this candle was definitely a candle that could have had you get off of your overhedge, or if you were too short coming in today. And now what's kind of cute is, let's just get this out of the way so you could see, we kind of matched this 563.18, which was that high, and we're kind of coming off a little bit here. So it'll be interesting to see what happens towards the end of the day. Does it hold in here and go sideways and keep some shorts wrapped up, or do they fade the strength today and then all of a sudden, they sold the event, and then we get a little bit of a retracement into next week? So it's hard to tell, but what you can see is, like you just said, Mike, the IWM's got another push. It got above this 215, 216, basically back to where it broke down from August 2nd, and this group's been lagging. So that was another, nice move in the IWM. I'm kind of focusing here on the XBI. To me, I'm trying to look for, responsible ways to continue to stay long. And if you look at the XBI here, you have 103.50, 103.08. This was 102, kind of holding in here. Has a still huge cup and handle, another bigger cup and handle. And if you look at the weekly chart, you'll see that, if it does get through this 103-ish, you could see 111. So I do think that if I were to choose, this second, between the IWM, the regional banks, and the bios, which I did, I have some options on. I bought the 103s for September, and I'm in some, and I would think that this can get taken out, and I think XBI could be somewhere where traders could continue to responsibly position while we try and figure out, if we close red and they sell the news in the afternoon, they sold, everyone knew they were going to sell Powell, it's going to be hard for much to really get traction. But if we kind of stay in line today, and then it's more stock specific and sector specific next week, I would think that the XBI has a nice tradable setup going into September.
Okay, Scott, why don't we talk a little bit about tech, because next week is a big week, because we have NVIDIA, Dell, Marvel all reporting earnings. The semis are about like 10, 15% off the highs. They're up today, but off today's highs. Would you rather see like more weakness in the semis now heading into next week?
Well, if it could just kind of consolidate and rebuild, there would be less price to perfection type of action post NVIDIA. NVIDIA was absolutely fantastic. On August 5th, I had bids in. I was buying NVIDIA 94 down. And then, a week or so ago when it was really tight around 106, I was like watching NVIDIA. If it gets above 106, it'll open the door for higher prices, tell us that this market has more to go. It led the way. You could take a quick look at the chart of NVIDIA and you'll see what I'm talking about. NVIDIA has been a leading indicator all year, and NVIDIA gave us a really, really, really nice, buy in the whole that day with Apple. Apple and NVIDIA was the day that we were said focus on right here. Then remember that outside day, NVIDIA did that red dog reversal, saying, "Hey, here's a higher low red dog reversal. Tech's still good," and it did. And then this was at 106.50 where it crossed a small DT line, and from there went to 130. And yesterday, if you remember, I'm like, "Hey guys, if you can't hold 130, we could pull in," and we didn't hold 130, and I pulled in, and now, we'll see what happens here between now and Wednesday. You have this upper channel. The question is, if it can go sideways for a few days, into next Wednesday, then you have 130 as a pivot, 136 and 140. So kind of gives you a little bit of a downtrend where if it, impresses and they guide up and do all the special things they've been doing, then you could do like a good call spread, like a 130 by 140 or a 140 by 150. So I'd like to see it stay in this range until pre-earnings. And if it pulls in a little bit, also if the market happens to pull in and and we kind of sell down at the end of the day, not saying we're going to do, but we can, then I would think that this 118.60 is your next level with yesterday's low of 123.10 in the mix.
Okay, and folks, why don't you let us know in the chat, where are you watching from? We have about 1,600 people watching right now on Twitter, YouTube, Facebook, and LinkedIn. Let us know, where are you? Are you in New York, California? Are you in China, India, wherever? Let us know in the chat. Okay, so Scott, interesting. I think earlier you mentioned being responsible. Do you ever get the feeling that this market, at least the last year or two, it actually paid to be irresponsible? Do you ever get that feeling?
Well, being irresponsible could put you out of business. It all depends on the time frame. If when we had the decline from July into August 5th, if you just said I'm going to be fine, chances are, and you didn't get stopped out and you didn't use my 21-day moving average rule, and if you just bought the whole way lower, boom, you got rewarded when we had that huge fast and furious rally up, which we did from August 5th. But if you then all of a sudden say, "Hey, I'm going to short," because we're not going to get through 540, that's the neckline of the head and shoulders pattern, and just keep shorting it up and say, "Hey, I'm going to be fine. We have to pull in at some point," you could blow yourself up. So I still veer on the side of being responsible, being methodical, having a routine, having a process will over time keep you in the business. I've been doing this since 1997. Maybe I could have made more money at times by being irresponsible, but being responsible, having stops, having a process is what's kept me in the business this long. Maybe, there are people that make more money than I do at certain points, but a lot of those people who did make more money back in the day when I used to trade on the same desk, most of them are out of the business. So for me, I have my own process where I'm responsible, and I also leave at lunchtime and I go to the gym and I clear my head and I'm up at 4:45, not 7:45, to be prepared. So all these things have kept me in this seat so I could be, your chief strategic officer here at Tier T3, help the Twitter community. And I also have to sometimes not put as much on because I need to be able to communicate. And if I have too much on, being irresponsible, then it's hard for me to talk right and do all the other things. So I wear a lot of different hats. So I prefer the responsible one.
Okay, well, let's go back to this whole AI topic, because again, we have like the big three big AI names or AI adjacent next week. Where do you think we are in that cycle?
It's a good question. Now obviously, it's we're not early. Like Nvidia has gone up multi 100%. Um, and I think a lot of everyone, like my kids, know AI. My kids, my dog too. My Cadence is a kid like Chase. It's there. It's just a question of, and there are companies that make money using it. It's not like the .com era where in the year 2000 when I was trading, you just put a .com on the end of a name and it was up 100%, 200%, and they had zero revenue. So AI is actually enhancing, mega caps, great business models already, and then there are obviously companies that benefit from it more, and I think it's here to stay. There's just the question is, uh, how much what does the market want to do with the S&P up 18-19% on the year? Are we going to be up 25% in the S&P because with an economy kind of normalizing or a soft landing, when over time usually it's 7% a year? So I'm in a little bit of a disconnect where I'm having a hard time buying after this move we've seen. Shorting hasn't really been working. But I'm going to trade the patterns and I'm going to try and maybe just be a little bit more methodical, but I'm going to be responsible. And what inning is AI in? I don't know, maybe the fourth inning. If you would have said in 2005, what internet is the internet in, because it came really into fruition in what, 2000, 2001 or two or whatever it is. Here we are in 2024, 20 years later, and it's taken on all different forms with all different areas of the internet, lots of different ways to make money. So there will be different forms of AI. It could be in 10 years from now, it could be robots everywhere, right? The humanoids, it could be taking over even more jobs. I was in California this weekend and I saw the first driverless cars, Waymo from Google, whatever it is, the white cars. And I was like, oh my goodness, I never saw that before. And we'll probably see them in 5 years everywhere. So it's going to continue to move on, and there will be hiccups when there's a little saturation and then something new will come out. So, I think as far as like putting the inning, it doesn't really do much for anyone out there except for, again, what's the comparables, where we are in the market cycle, what month is it, and what's the complexion as of right now. Going back to Nvidia, Nvidia, if you go to the chart, you'll see it did have a corrective phase. For Nvidia made a high in June, okay, and then pulled in what, 40% or so, and now it's bounced back a bunch. It's still in this overall channel. So the question is, will Nvidia be enough? Will the guidance be strong enough to take out 140 and and go for another run? And if it goes to 150, 160, chances are it's going to bring the stock market with it, and there'll be a nice move. If it's not enough, chances are we're going to be back in the zone, and that'll probably get us a little bit more into a corrective phase for September. And as we speak right now, the spies are bleeding. Okay, they're it's at this point, that 563 was good to know, and we'll see what happens if all of a sudden we close in the lower. If we break this little spot right here, the spot right here is what, like what is this, 557? Chances are you could see, so you'll see some more downside. You'll see some more stops in the Qs right now. If you go to the Qs, Qs, kind of retested this broken trend line, and it's already red. And if this were to break, watch it, write this down, 473.81. It could cause a little bit of a more of a corrective phase and be risk off next week.
Okay, Scott, how about gold? So I think gold has sort of been keeps sneaking up on everybody. GLD is up about 21% year to date. What do you think of gold here?
I haven't been as active. If you look here at the chart of gold, when we had it on power plays and I had it on the beginning of the year, really, with this 193, 194, and we had a really nice trade up to 225. That outside day kind of got me away. Then everyone who's been trading it since, they've been doing really well. This is when gold ignited for the active trader. If you trade and you're a swing trader and you want to be long, it got above 222. That was your spot actively. And then it hit a high of 234. I would say this area needs to hold to keep it. You don't want to see a breakout failure. This is 229, so actively you could be in a verse 229. If you are an asset allocator, which is a different time frame, which is what I talk about, you could be buying gold every single month as if you're with your equities. Like if you're in a 401k and you have that pie chart, gold should be there every single month, 10% only. Same way I say Bitcoin should be in your asset allocation also. So 20% of your asset allocation, or maybe 5 and 5, depending. There are a lot of gold bugs out there, and Bitcoin, people that love it. So I would say if you love gold and Bitcoin because you think of inflation and you're anti-government, then have that as 20% of your pie chart with equities and bonds. But gold you could do every month or trade it, tactically. So tactically it became a buy right here and then held the 8 day. So it's still, acting special actively. And obviously long-term, it's been acting great. Anyone who's been accumulating it for years are doing fantastic. But it still looks good. Still looks good actively. And again, it should be a portion of your asset allocation. Now let's go to Bitcoin real quickly because it's trying to play catch up. I do think Bitcoin out of all of them is something you could accumulate every single month for the next decade and make a lot of money also. And here's the channel on Bitcoin. Channeling and channeling. It's trying to get above this spot. It's been lagging. You need this. You need the market not to fall apart. If the market falls apart today, chances are, it's lagged. It's not going to have the Bitcoin weekend that people want. If the market holds in there, maybe there's a better chance that it can get towards 65 and change. The IBIT, it's for itself is right here. I'm long some. Thinking that could break above this and play some catch up, but I'd hate to see this do like a breakout failure and the market fall apart. Then I have to think twice about that actively. But long term, in an asset allocation model, you could be buying IBIT every month, and I think you're going to make money because at some point it's going to take out this 41 and change. At some point, Bitcoin's going to take out 73,000, and you'll see your 85 to 100,000. Just a matter of how long does this channel have to go for, and it's been going longer than most people who love Bitcoin would want, but it is what it is.
Okay, Scott, so do you think that the longer the channel, the bigger the potential move after?
Usually that you could actually Google that phrase, right? What's the exact phrase that they say? The bigger the base, the bigger the move. So again, look at the size of the move that IBIT had from here up. It takes time to consolidate that. So depending on how long that's going to be, at some point, everyone that's been accumulating and taking away all the people who took all their profits here, there'll be a whole nother channel here for it to get above. The question is when. So if you don't know when, just accumulate. And if it starts to go and you trade actively, there's a whole quadrant here where you can make a little bit of money before that. So that's what we're trying to see if that's the case. But again, at the end of the day, we'll know more. Did they sell the news today? And it seems like they're trying to.
Okay, all right. So what else are you watching now?
I'm in. I bought Meta options, and today it's not acting well. But Meta is such a tough name. I feel like Meta has been one of the strongest names. I talked about how, if any name's going to make a new all-time high, we discussed that probably here after we had our low in August, and now it's been trying here. So I did play the stock yesterday. Didn't love the way it acted, so I had to get out. I'm staying with some options just because sometimes it's erratic. But if we pull in and we're lighter next week, you got to be careful here with Meta. But if we were going to go and make a new all-time high and squeeze everyone to 5,800, this thing would have been above 542, 544. And as of right now, it's not.
Okay, Scott, I'm going to ask you to pull up a ticker we have never covered. I've been reading Scott's note and editing it for like 6,000 years, but IYR. So the real estate stocks have been on fire, which is something that I don't think too many people anticipated. But what do you think of this whole mess?
Well, it's not a mess at all.
Yeah.
I don't put this up but look, that's why technicals are beautiful. I could look at a chart and I could tell you everything that's gone on here recently. Like here, you had the huge base, and this was your, your pennant slash wedge slash whatever you want to call it. And then it had a gap above it. So right here, if you were waiting for it, hopefully you had a bunch accumulating it above the 8 day. Then you had a big gap up, big pro gap. So you could have been long versus whatever this was, 89.70. So I'm just doing a little bit of a technical lesson, something that I haven't charted. with the naked eye, and then from there, it's basically been a little sloppy, but it's held the 8 and 21 day. So if you are an active trader massaging the position using the 8 and 21 day, it's been up ever since. And now you're getting another breakout trade here, with a high of 99.22. That's a really nice chart, a really nice trend. What I say 90, what 99 what? 99
21 was it?
22. I like to be precise. So with that being said, here's 99.92. So would I be buying it here? No. But if you were accumulating in your tier system here, and then you bought more on a breakout, and then maybe even here on this topping tail said, hey, look, it's a little extended, let me reduce a little bit. Probably on this day you could have saw how powerful it was, and now I would trim a little bit. But ultimately, that's a it's a textbook really nice chart. Tiny bit sloppy for my taste, but worked out very well for whoever was in it, and congratulations to you.
Okay, so as far as the overall market goes, so we've had this huge move off August 5th. People are, jazzed up to some extent, I'd say, on Powell today. Do you think like we've taken too much potential for the rest of the year? Because the spies and Qs are up like 18-20%, whatever it is. Like, how much meat on the bone is there still?
To be honest, I don't know. I've had a mental disconnect recently saying, hey, even down here when they're like, oh, they have to cut a point. I'm like, guys, we were up 19% half the way in. We're now up 11% on the year, and you're begging for a point rate cut. And now we're up here 1.5% off all-time highs. Okay. And they're saying we're going to cut 50 basis points, or they have a full point. I'm like, it just doesn't make much sense. And the street's been, they've been poor on everything. Their projections on the rate cuts, it's just, they've been wrong. So if we're going to be up here come September 18th or above this recent high, there's not a shot they do 50 basis points. If anything, they'll do a quarter because they said they're going to do it, but, and I think if we're up here or higher, there's no way they're going to go more than a quarter, or maybe they'll do a half instead of a full. So the question is, how are they going to, figure that out? So, listen, I've seen markets make people feel very stupid, and I started to feel a little stupid as I started rolling up shorts probably from here. And thank goodness I was able to trade around it. At this point, it all depends what happens here. If we do trade towards the lows of the day and close on the lows of the day, then everyone technically out there will say double top, they sold the news. And then next week will probably be a softer pack and fill, and we could see, here's this is yesterday, we could see 551. We could even see this gap here, so if they were stronger today, okay, and the street got what they wanted, or we hold above the 8-day, chances are this 563 to 565 gets taken out, and come September, we're going to be 568. We're at a crucial point right here where it's either you have to have high conviction, and you're giving things room, and you don't get paid monthly and quarterly, and you're just in things as investments, like Apple, for instance. Been in Apple for a decade, okay, chances are you don't care. Here we, on that day of volatility, I had bids from, I think, probably 202 down to like 190, and I got filled all the way down to 198. And then here was your move. I got out of it as a trader. Up here as a trader, I don't think there's any, crazy risk reward being long right here, because if this were to break, you could see a little bit lower, and look at the size of the move. So there are some things that make sense as a trader to put on with the risk reward and the setup responsibly. And there are some things you're like, hey, you know what? I don't need to. But if this were to go sideways, just say for a little bit longer while the market pulls in, then hey, maybe next time it gets here, it'll trade through it. But I would watch right now this area. If this were to break, this will give us some clues we're going to retrace lower. So, but overall, it's all about your time frame. Like even the blood in the street account, Mike. Remember the blood in the street account? Okay, which is 17 for 17. Some people like, Red Dog, why did you sell it? You said it was going to get to a new high, and that's how you have to sell it. You're only in tier 1. I'm like, well, I based it off of here. Bottom line is we've done the blood in the street twice this year, documented, fully documented. Like you can go back to the tweets. I can even send you, the what's it called? The confirms from Bright House. First time was here, which was 49.76. And then I got out actually at a new high because I was only 5% off the highs, and I was, we were in a different tape, different time of year. And then here was right on the close there. And then I got out right into this resistance area because just to me, I'm like, why are we going to, we got so far so fast. Why do I need to even wait for a new high? I've already made 6%. And if we continue to go, I'll get more swing trades. If we continue to go, I have a 401k that's every month, a 403b and a 529. But the blood on the street account is an account to take advantage when there's blood on the street. Because every now and then when there's craziness, like, oh, I wish I had money to buy there. Well, that's what this account is for. So for those that model the swing account after it, they did fantastic. And for me, I stuck to kind of my discipline here, saying, you know what, I'm going to get out here and carve out, and that's that. If we would have continued to the downside, we were talking about how I can get to a tier two. Tier two was supposed to be, into this 4,800, which never happened. But anyway, so the point being, to think we're too far too fast, it all depends on your time frame. Yes, actively, if you're trying to be long to make money in August for next week, so you can get a paycheck in September, you better watch this area because it's getting a little, temperamental. Same way if you were, if you were short, which I was pretty aggressively short into here, and this end over move took away from how much I made long, so took some money back. So anyway, the point of my babbling is you have to have multiple accounts and have to be able to make money multiple ways. It doesn't happen overnight. I've been doing this since 1997. I started out with just a day trading account. Then after a few years, a day trading and a swing account. Then after a few years, a day trading swing and an option account. Then after a few years, a day trading swing box and options account, all four. And then all of a sudden I started with the 401k because I went from a K1, I'm also a W2, and then the 403b, and then my wife's blood in the street. And here I am at 51. I have all those and the whole life insurance policy, which I do recommend. If you're 30 years old and you have a kid, or 35, it hurts. But, I started at age 35. I put $1,500 a month. And at this point, I'm very happy I did so. I would have spent it somewhere else. And now I have a nice big cash value. And if God forbid something happens to me, which could have happened to me when I had my heart surgery, my family was very taken care of. So figure out which ones and where you want to live. And it takes time to get to all those places.
Okay. All right, Scott, let me ask you a dumb question. So
no dumb questions.
I will defy that. No. What does the street want? What does the street want to keep this thing going?
I'll be honest. I think the bulls want to pull back. They don't want to feel like they're chasing, and the shorts that are trapped need a pullback. So I would say the street right here would probably like a pullback towards, 55.01 before attempting another new high coming up in the fall. I think that's what the street would want. It's street wants a little bit of a lower high double top, maybe a pullback to 55 here, or maybe even here. And then from here to there, that would be a third of this move, or less than 50% of a retracement. And then from there, it would feel like you could buy more stuff responsibly, get into swings, get a broader area, and then go back to highs if we're going to make new highs. I don't think the street wanted to blast through 56.43, blast through 56.69, and be at 5,800, first week of September. That would be too much of a pain trade. Or maybe that's what I want, but I think I'm, pretty common sense guy that, will, is what the mind of a trader. I'm usually in the mind of a trader, at least a responsible one.
Okay. All right. Okay. Just where is my screen? Okay. Guys, so hold on. Just make sure.
By the way, Anthony's saying to look at Kava. He's laughing. Wow. Didn't the street say this was going to be bankrupt way back in the day? That's why I guess how many people were short. Kava doesn't care what's happening today. They can be very stock specific. Look at the 8-day. Broke above the 8-day. Broke above this consolidation. Had a big gap on whatever today was. I guess today was earnings, and boom. Was today earnings?
It was this week. It might have been Wednesday, but they had a big beat.
Well, some people are saying, Red Dog, look at Uber. You want to look at an idea? Look, here's Uber. Uber, nice bull flag above the 8-day. This might be able to hang here if the market pulls in and then go again above the moving averages. Not much of a pull in. So again, there could be specific setups that might be worth your time, but you got to be careful.
Okay, all right. Okay, guys. I think that's a good note to end on. Before Scott issues us some final words of wisdom, we encourage you to go to t3live.com/show. The link is also down in the description. It's inside the tweet if you want to get Scott's free ebook. Highly recommended, especially with all the big earnings reports coming out next week. Scott, how about one more? How about Starbucks? Since that's been in the news, and our friend Rolando is requesting Starbucks because this just came back from the dead.
Looks good. On that CEO, you have a pro gap. This sometimes would be an earnings gap, but this was based on news with the CEO. You could be long this versus what's this level here? 90.29. So you want to be long versus 90.29 because that's your point of reference. If it's going to be tight, if there's going to be momentum, it's going to hold this 90.29, and then at some point you could be long versus this is a higher low. It held the 8-day, gets above this 96.01. That's your ad. That would be momentum. So you have two different ways to play it. Be long verse in area, so you don't have to overtrade and say, hey, this stays strong. There's momentum here if it holds this area, the gap area, and then if it's going to go to 100, what does it have to get above first? The high of that day, which is 96.01. So that would be your additional tier for more momentum. So at this point, it's still consolidating this move and looks pretty good.
Yeah, wouldn't it be great?
Quick and dirty.
It would be amazing if Starbucks would give us breakfast burritos. It seems like the logical move with the Chipotle guy coming in. Anyway,
put that in the suggestion box. All right, I got to get going.
Okay, all right. Go on, Scott.
No, I was just gonna say I'm not gonna be here from 2:00 on. I would watch to see how we close. It could also be just choppy. We can close at 560 and keep everyone guessing. If we do stay above, just say like 557 and stay in this range, then maybe next week could be little low volume stock specific. You could play certain names like maybe Starbucks or, like he said, Kava doesn't care, or maybe some others. But if all of a sudden, we start to really break down or correct or retrace, it's going to be really hard to, have anything make too much upside traction unless there's like some news or event focused situations.
Okay, excellent. Okay, Scott, as always, lots of fun. Everybody out there in the internet universe will be back next week. Everybody have an awesome weekend.
Yes, and have some fun. There's a week left of the summertime. Don't be so damn serious. And if you messed up this active sequence that was fast and furious, take a step back, look at how you handled it, because there will be so many more, right? There's 4 quarters in a year. So if one of your quarters isn't great, you have 3 others, and there's still going to be one more left. There's 50 plus weeks in a year. So if you have one good week, there's a lot left to do. And hopefully you have a lot more years left in your career to learn from. So if you feel like you missed something, what'd you really miss? So don't beat yourself up. Just evolve. If you evolve and learn and say, hey, that was my fault, I did it wrong, instead of pointing your fingers at the TV or at me or Mike or at whoever it is, you'll learn and you'll take accountability. And that's the only way you're going to get better. Listen, appreciate you. Have a great weekend. Later, Mikey.